All right, we are live on YouTube and Twitter/X. We got everything working now. We're rolling. We got the camera looking good. We're on time. We got great stories to talk about today. So thanks everybody for coming to watch this. As people funnel in, I'll probably go through some of the stories that we're going to be talking about today. Good morning, George. How you feeling?
Morning. I'm doing great. We'll see. We'll see if we can do as well as last time. I don't know. Like for those that missed it, we actually got shared, I think, by the X platform, and we got over 300 simultaneous live streamers towards the end last week. We almost kept going. We went for almost 2 hours, but we ran out of steam. Steven and I were actually together. We'll see. We'll see if we can do that again today. But either way, we got some great stories.
Yeah. Yeah, so it's going to be tough to beat, but we'll do our best. And let me start going through some of the topics we're going to be talking about. Just for everybody that's in here, by the way, we are doing great on our subscriber growth. We're on our path to 2,000 now. We're still early, but we're at 1,072. So if you're in here on YouTube, please like, subscribe. We love seeing the numbers go up, and we love doing these live streams. So we're so happy that we get people to watch it and subscribers and likes, and we're happy that our viewers get some value out of this. So without further ado, after my little pitch, I'll get into some of the topics. So in the newsletter yesterday, one of the main segments of it, which is a topic we've talked about before, but it's becoming more and more of, it's growing in people's minds, is the AI bubble possibility with NVIDIA and SMCI and seemingly all semi stocks having gone up so much. Some people are starting to really have their doubts if it's sustainable. And we made a joint video, which I'll link after this, but we kind of gave our thought process on it, and George will talk more about how he feels about the whole situation. Next, we have two stories, which I feel like are probably going to become more and more talked about on our live streams, which is we have comments from most likely both of the presidential candidates, Biden and Trump. So Trump came out and he talked about some of the social media companies, TikTok, Meta. We'll get into what he said and how it's affecting their stocks and how it could continue to in the future. And then Biden is releasing his 2025 funding proposal, which includes an unrealized tax, which although it's unlikely to be passed through, I think it brings up an interesting conversation about if that'll ever happen in America, because I don't believe it's ever happened to date. So we'll get more into that. Next, we have the market concentration hitting very high levels. The top 10 stocks account for 30% of the total market. And usually after periods where the concentration is this high, it tends to revert. So we'll talk about maybe if equal weight indexes are more interesting at this time. Next is a little bit of a funny story. So if you guys are on social media, you probably saw this get announced where Jake Paul and Mike Tyson are going to be fighting this summer. And a lot of people had a lot of different thoughts about it, but it's interesting because it's going to be on Netflix, which is the first time a boxing event and live sports of this magnitude is on Netflix. So we'll talk about how that affects their stock. And then lastly, Bitcoin going higher and higher, continues to raise, hit a new all-time high of over 72,000. There's a bit of UK news, which we'll discuss, but Bitcoin also surpassed silver and market cap after this latest rally higher. So we'll get into crypto and all of that. George, do we want to start off with how the QQQ and SPY are looking today? It looks like both are down slightly to start today. I saw an interesting or a funny note about the Dow, where they were saying last week was the most it's dropped since October, and it was like 0.5%. So it shows you kind of how good the market has been for the past couple of months.
Yeah, it's I mean, especially for those stocks, I think, the QQQ has been a little more volatile. But yeah, we're seeing actually QQQ dip below our bull level. So we set our bull level. I set that every week based on, what I'm looking at in the market, and I would say the historical relationship between QQQ or SPY net option sentiment and the stock price. And so I set that for the last for a while. They've actually both been at 40 for the bull level. So they'd have to be above that. And then 30 is the bear level. And 30 to 40 is kind of the in-between territory. QQQ went below 40 today. It has been below 40. So I think by the time we get to the model portfolio, maybe even some of the investing newsletter picks, we're going to probably adjust that portfolio downward in terms of our exposure to that, to tech especially. And I would say we might even look at things differently, because I would say some of like the mid small cap tech is even doing a little better today. It's kind of the bigger players that I see getting hit. So we might have a pretty targeted adjustment of that to look for lower larger cap tech stocks that are lower in our signals, which we've never kind of gotten that granular. Sometimes we'll look at sector based, but we haven't gotten like, I don't think we've ever looked at kind of multiple factors. So we'll look at sector and large cap, because I think I do need some more protection, because a lot of the longs that we have are tech and large cap tech, and then kind of tech adjacent like communications, Google, Meta, that kind of thing. But yeah, I would say that the softening in QQQ option sentiment is very concerning, especially because that's been a larger pattern, that's been brewing for the last few weeks. So yeah, we'll take a look at that in a little more detail when we go through the model portfolio and how we might adjust our portfolio at the end. I think that's a good start, right, Stephen?
Yeah, I think so. A follow-up I would have to what you're saying is, the large cap stocks that you're kind of saying are a little bit less interesting, or you have some worries about now. They've gone up so quickly that, I mean, they can't go up forever. So I feel like the scenarios are either the market's going to broaden out or those stocks are going to go down. So it looks like you're saying you're going to kind of look in other areas for more opportunity. So do you think a more broadening of the market could happen over the next, weeks, months, versus all of those stocks like declining to meet the stocks that haven't participated?
Yeah, I mean, I think what we might see is, I mean, I think we're definitely seeing a correction, and I would say especially communications over tech in the last few weeks. But I would say part of that is, as we've talked about many times, part of that is just concern over consumer spending trickling down into ads next, because there is looking more and more chance of a recession, which isn't some scary monster, but um, it is a looming problem. And I think, when you see things like QQQ net option sentiment go down, that's just a sign that the market is, losing some exuberance, showing more concern for that. So yeah, I mean, I think we'll definitely see um, some broadening in the short term. And I think this is something that, kind of always confuses people, and I've talked about it more and more lately. But I think one of the ways that we've evolved our picks, I think, is very important. Uh, in 2022, we actually started, picking things in the newsletter, and that was actually just I open sourced my traits, and um, and basically did just a sharing of that, just like showing exactly what I was doing. But a lot of those were swing trades on QQQ with options, or even Nvidia. I traded a lot, like the chips, when I wasn't as confident in the indexes. And basically what happened there is we saw that, too many people couldn't trade options. And so I would say I overcorrected last year, and we beat the market by 50% in 2022, and again very close in 2023. But I would say I overcorrected last year, where I would only hold things pretty much for a week, update them once a week, because that was going to be easiest to follow. Only do long short, because basically the message I got back was, hey, we love these letters, but we can't really follow options trades. I don't know how to do options trades, and you actually tell people not to do options trades. I'm like, okay, you're right. You got me there. So that's why we did long short. But I evolved it even further as I was thinking this year. And there's a reason that we do paid products for the updates, is basically it's our philosophy that until you have a certain amount of time, and I would say budget to support a higher frequency trading strategy. We don't mind you just checking once a week, and a lot of what we propose are going to be risk controlled, that you can own them for a week. It's just that in 2024, we're obviously doing even better than 2022 and 2023, orders of magnitude higher, above 300% on the market. And we're getting close to, I think we crossed 100 picks, and we did 150 of all last year. So we're doing even better picking more picks, which is very, very hard to do both of those things at the same time. So we're really proud of that performance. But, one of the things we're looking at this year is that, yeah, like I think there's a balance between, your level of expertise and the amount of time you update a portfolio. But I think this year, more importantly than ever, if you're going to trade smaller portfolios, if you're going to take like single stock concentration risk, it's important to check, the Prospero app, or sign up for, I would say one of our higher frequency products, the premium investing letter, or either the trading letter. Because if you're going to take on that much risk, expose yourself to a volatile market like this, it's really important to, not just set it and forget it. Like, we're considering, even though Meta's a stock that we, have liked long term, we have been trading in and out of it a little bit this year, because it's not necessarily, especially according to one of the stories that we're going to go through later, it's not necessarily an open and shut case in terms of us continuing to like it, when I'd say especially political risks loom on the horizon for that stock. That could change the value very quickly, and that kind of changes the risk profile for us. But as always, we'll continue to watch the longer term options markets and analyst coverage and things like that to let us know if we really do want to update our view on Meta. But we have noticed one of the things that's like a little hint that you might not notice in the Prospero app is that, basically when you get in and look at like the search and then search by signal, you can see like the highs and lows. For a long time, upside breakout for every stock, when you look at that search, was, Meta at 100, and then the next highest stock would be at like 87. Now it's Meta at 100, MSTR at 99, and Coinbase at 91. So what that's telling you is the distribution is tightening. So Meta is actually getting closer. We've seen, especially the last few weeks, getting closer to other stocks in upside breakout, meaning it's like peripherals have declined. So we are seeing a bad trend on Meta. One of the reasons we may get out of it today, we might wait for this to develop a little further. But, as we'll get into in a bit, Trump kind of has Meta in his sights, and that's a scary risk with an election coming. He is not one that is afraid to retaliate against his enemies or perceived enemies. So that is a real risk for us to look at. But as we always do, as I'm saying, we'll wait to make sure it plays out in the options markets in an ongoing way. We already are seeing evidence that it is. But we'll continue to monitor that situation. But that's just a really good example of, the many ways and angles that we look at analyzing information using the Prospero signals.
Yeah, so I think we can get into the Meta Trump story. It's pretty interesting to me because on the surface level, I feel like you'd think, okay, so let me backtrack. This all came about because there was a bill that was proposed to ban TikTok in this past week, and it's like going through the Senate right now. So Trump came out and he said he would be against banning TikTok because he thought it would help Facebook, help their business. And he had a crazy quote where he called them an enemy of the people. And on the surface level, you'd think Trump would be hard on China, maybe for this TikTok ban. But now with the competing conflicts of Facebook and how he's like probably hates Mark Zuckerberg and all these different things, he's actually siding with TikTok not being banned, and he's siding against Facebook, which we've talked about how the election year could possibly affect Facebook, Meta this year going forward more and more, and it seems like that's just beginning to start now.
Yeah, it is a bit odd, to be honest, because Trump is like easily the hardest on China of any president that I've seen in the last 20, 30 years. And I've actually made the point that that's one of the things that I agree with him the most on, in terms of just like some of our trade policies, like especially vis-a-vis the amount of labor that we've allowed to go abroad to China. Um, is something that I would say both political parties were doing, really, like, pandering to those environments, and those, I would say, special interests, and, like, I would say more specifically a lot of American private equity companies. um, but yeah, I would say that it is odd given that, but I think it speaks for itself. I mean, obviously, these are platforms that I do believe have still banned him. So, I don't think, I don't think he's been someone, and, this is probably true of most people, that are very good at putting their personal feelings behind, the bigger picture. And, there are legit security concerns with TikTok. I think that's like that's the one of the worst kept secrets in anything. It's, basically like CCP, Chinese Communist Party, like um AI institute, like their institutional grade AI that makes the recommendations so good. So they're helping out industry a lot there, which is something that I would actually advocate the US to do more. But I do think it's tough, because I do think that, these with Musk kind of at X, and, some of these other, I would say, more liberal leaning social media platforms, um, that we are getting the same polarization that we see in the media in these social media platforms, which also makes it interesting, difficult, whatever you want to say, to bet on these stocks as the election gets closer, because it very much could be, a situation, especially with Meta, that we're seeing, that, the stock could really get hurt the day Trump wins an election. So that adds some pretty interesting risk, because, the probabilities of that, very, very hard to predict. You really kind of have to chalk up a prediction as hard as an election, especially ones where the polls have had their accuracy problems, as much as we've kind of seen the last few elections. Um, so I would say we're probably talking about close to like a 50-50 toss up there. And in terms of him winning, and that's a big risk on something that now looks like almost certainly would hurt Meta stock. So that's something that we're going to be thinking pretty hard about as the election gets closer. Hold on. I got to grab my computer charger. I'll be right back. But I'm listening.
No problem. We are about to cross. Yep, we just crossed at 100 viewers. So thank you, everybody. Please like the video, share it with your friends if you gain value from these. So we had a Trump story, and now we have a Biden story. And I think as this year goes along, we're probably going to be covering, how the political race is going to affect, stock market and business world more and more. But Biden was releasing his 2025 funding proposal today, and it is said to include a 25% tax rate on unrealized income of the wealthiest households in America. Um, this would be a big change for the tax code, because it basically means, like, if you're someone who is just holding a stock, you don't actually have to sell it for it to be taxable as income. They'll just tax it based off your ownership. Um, and they're saying this is kind of a wish of the Biden campaign, but it's not actually going to happen, most likely. But I wanted to spin that also into, like, I feel like this is kind of against the ethos of America. I don't know what you think about it, George, but could it happen in the future, even if it doesn't happen now?
I agree that it's just, I mean, I wouldn't, who knows what the ethos of America is anymore. But yeah, I mean, it's just, if there's one thing that we've seen consistent behavior from both political parties, is a consistent desire to take care of, like, I would say, the wealthy over the less wealthy and not wealthy. Um, the concentration is, like, I think it's the 10 richest people now have as much money as the bottom 50% combined, which is just like absolutely insane wealth disparity. So, I think people are, when I see things like this, I see the political parties are worried that people are getting pissed off about this, as they should be. But I don't think it'll pass because at the end of the day, the stuff that passes consistently, the only stuff that we've seen pass consistently over the last 20, 30 years are, it's kind of like pro wealthy. So there's no, I think this is the kind of thing that looks like just lip service because they're afraid. And the one other thing I did want to say in terms of politics, and as we cover it more, we really do our best to stay neutral here and cover all sides of the story and fairly. So if you guys ever have comments on how you feel and if you feel that we're covering both sides of the story well, we're really happy to hear that. We want to hear that kind of feedback, and just make sure that we're doing that. So always feel free to post questions, comments on that. We strive to, what I say in some of the groups that I'm here, um, we like to discuss policies, not politicians. And as much as possible, we like to, kind of stick to that and figure out, obviously some of the politicians and their personalities are relevant to the policies, but we try to keep it within that scope. And I would say, one of the things that we always talk about in terms of politics is the one thing that I can definitively say is it's become too polarized. And I think people on both sides need to do more to understand the other side, as opposed to just fighting.
I think that's well said, and I agree. And one story that I just want to update, even though we've covered it before, obviously it was a major topic of the newsletter, and I posted a link to the video that we made about it, was the topic that's becoming more and more in focus of investors, which is AI a bubble? And although we've talked about it, maybe we have some new viewers and people who are just seeing the stocks go up and up, and maybe you could share how you feel about it and why like it's different and you don't believe it's actually a bubble like it was in the early 2000s, late 90s.
Yeah, I mean, I think this is a really funny thing when I see people talk about that. And I commented specifically on a post online about this, where it's just like anyone that calls this a bubble doesn't really know what they're talking about in a variety of ways. And the example that I always lean on, and I talked about this in the newsletter, is it's just like when you think of a bubble, you think of something like pets.com, a non-profitable company that just gets a crazy high, valuation based on not even being profitable. That is so different than what's happening here, where there's just like massive orders that keep increasing. And like you look at SMCI or Nvidia, especially, that are just like doubling their business year over year at massive, size and scale. And the example that we always use is that Amazon, in the last 15 years, their best year over year growth was 59%. Nvidia's last two have been 206 and 239% growth year over year the last 2 quarters. So, and that's actually with their business being larger than Amazon's on that 59% growth quarter. So crazy growth in these businesses. That is not a bubble. Like a bubble are crazy nonsensical valuations. These are high valuations, and it's fair to say like what is the right valuation for Nvidia or SMCI, and there's reasonable arguments to be made that they're overpriced. However, like the thing that I'm seeing here that I've never seen 20 years as I started as an equity analyst when I was 17. I worked on the buy side at a hedge fund then. And now I've been in AI for about 13 years, been predicting stocks for many years. I've never seen something called headline risk behave in this way. Headline risk is basically the idea that actually most companies, especially public companies, are making decisions based on worries about what will end up in the headlines if they don't do things one way or the other. And typically, companies are very hesitant to spend money on their non-core businesses, R&D, capex, anything like that, unless they're reasonably certain that it's going to pay off, get them a good ROI. So they're cautious and they test. because they're worried about being slammed. And they're right. If you spend a bunch of money uh, in an area that ends up not yielding good ROI, analysts are going to slam you. Maybe even your shareholders are going to slam you. It's going to hurt. Look at what happened with Meta stock. That's the perfect example. They spent money in the metaverse. It didn't work out well. And the stock maybe it got throttled. So I think that's the perfect example. And it took it a while even to recover. It took it a while of doing business well before people even started to believe them again. That's the perfect example of why you actually want to manage headline risk. So what is so rare and different about this situation and makes the bubble comment kind of silly is that this is the first time I've ever seen not only companies allocating funds in AI when they don't even know what they're building yet. They don't even know what the applications are in many instances. That's nuts. But what's even more nuts is the headline risk has flipped. It's become such a spending environment in terms of what competitors are doing, what every business is doing, the lip service being paid to it, that companies are now showing demonstrable behavior that they're more worried that the headline risk is not spending in AI. If one of their competitors finds something that they're not using, that they're going to get hammered, throttled by shareholders just the same way. That's the first time I've ever seen headline risk forcing companies to spend more on unproven tech. That proves just how real AI is. And we were actually when I posted this online, I actually I've been doing this over the weekend, having some interactions with people. One of the ways I learn how to communicate these ideas is I kind of socialize them in different places. And I would say the very interesting thing that I saw with this is, some guy posted about the bubble, and I posted I disagreed, and someone was like, yeah, I even saw a salon that is making AI shampoo, and people are eating it up. Well, not literally. I don't know anyone that eats shampoo. I think you probably need help if you do. But oh, thank you, Chris. But there, people are getting that excited about it, or even people that are making shampoo are just we could use AI in shampoo making, and that's just the perfect example. People are taking stabs, and the appetite for it is so big that a lot of these ideas are actually landing. So that's just giving people more to spend. And that's the thing. These companies keep going up because there are very real orders for chips, which is driving up NVIDIA stock, driving up, the stock of the cloud providers. That's part of what's happening with the Magnificent Seven too. And obviously most of the Magnificent Seven, you could argue that Apple has some AI, but they're not, really doing all that well with it. Have significant exposure to AI. So, this is very much part of the boom. But yeah, it's very real. And I think that that's a really important thing, as you're talking about this, the nuance between understanding the difference between a bubble and stocks being overvalued, right? Because you have to be so overvalued to the point of nonsensical valuations before anything is in a bubble. And given the way these orders for chips and the demand for AI products, we've all seen it, the fever pitch around the conversation, all of that adds up to, a very real conversation about whether the stocks are overvalued. Personally, I can't say that definitively. I'm saying one could make the point. I'm not sure. I believe they're overvalued. This is a perfect example. I think what a lot of people don't know about ChatGPT, and I love to, while we're kind of giving a holistic discussion of the AI market, what a lot of people don't know about ChatGPT is they needed to sell to Microsoft because they were paying the compute out of their pocket. And they got so big, so did their compute costs, right? And you're just like, what compute costs? They're not charging you the real cost. They're shouldering, now Microsoft is shouldering a huge cost burden to run it for you and get you addicted to the product before they jack up the price. Classic Microsoft, right? So it's really funny. Sometimes when people tell me, sometimes when people I get pitched on so many apps, they're like, oh, what if I build an app and use ChatGPT, blah, 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 this? And I'm just like, well, if you're going to use ChatGPT, how do you like building apps for Microsoft for free? They're like, what are you talking about? I was like, you don't know you don't know the real cost of your app to run. Right now, the cost of um, ChatGPT's API is not necessarily at all going to be what the cost of it is long term. So you don't actually know the margins on this app that we might spend a bunch of money building. So I think that's really important. But I mentioned that within the scope of what we're talking about too, because even all the people using ChatGPT, using LLMs, that are shouldering the cost of that. Obviously, if you use something like Llama, you could use it on your local machine, and that's not going to the cloud necessarily. But all of the people using ChatGPT, it's running in the cloud, that they're running computation on that. So that's one of the things. We're not even talking about necessarily like B2B expanding, even though that's absolutely happening. You could actually, what we're also seeing is like Microsoft ChatGPT being a consumer of these chips and their demand just inflating as their B2C business grows. So I think all that is a very important way to look at the market.
So now the question that I have following that is like, we talked about that stock and the company SoundHound AI a few weeks ago. So if AI isn't a bubble, in your opinion, as the AI industry gets more and more attention and it continues to grow, do you expect stocks like that to be pushed and like kind of bad actors or grifters to take advantage of the space the same way like when the last crypto cycle happened, like NFTs were popular, all this like stuff that was never gonna like actually be valuable got pushed. So even if AI is in a bubble, do you expect there to be more and more like companies, like maybe we say SoundHound AI is like the pets.com of the AI? Like I'm not saying they are, but there's just going to be companies that are just trying to use the AI industry to gain attention when they're not really like technology leaders.
Yeah, I mean, I think you just mentioned a lot of stuff there, and I don't want to conflate too many things. Um, but what I will say is like, there's, I think when you look at something like SoundHound, we talked about it, like there is some meme social sentiment value to it. And there's a lot of that. We see that in crypto. I think you're absolutely right. And the hard part about that is like, while we can have informative discussions about whether companies are fairly valued based on like computing orders, right? We could have substantive discussions on that. It's a little harder to talk about like if something like SoundHound is closer to bubbly on its own, or if it's still like somewhat in the realm of fair value, because it's very hard to value social sentiment. I think you can agree it's there, right, when it exists, but the speed at which it dissipates makes it very hard to like, you could say like, yeah, there's social sentiment value to SoundHound right now, right? But what is that? How quickly would it lose that value as people start to like talk about it less positively, as it starts to go down quickly? You know, that is the tough part of that conversation. And that's why I generally advise retail investors to stay away from those things. And, what even makes something like Bitcoin tough, because even if it's going up and up and up, you don't really know when the rug pull is going to come because you don't have transparent options markets. So you don't even know if institutions right now are just like pushing up the price to load up on put options and they're about to, send it down 20, 25% in a week, 2 weeks. You never know that. And that's the hard thing. Like, it's that we talk about this all the time. People don't understand the risks involved in these things. And, while I would say that I also do like something like Bitcoin, on longer time horizons, I also worry about what happens if, more coins are, kind of seen as competitive with it. It's the same problem as Nvidia, right? Where if they lose a massive market share, even a little bit, it could really affect the prices. So that's why people, like, I think often don't understand the risks involved in their trades. And like, I don't like a positive 5-year outlook and the potential to make huge money on Bitcoin is not why I don't recommend it to people. And it's similar with SoundHound. It's that you don't really know the risks. Nobody really knows the risks, and nobody really has transparency on in the case of Bitcoin, but not in SoundHound, to really know exactly where the levered bets, options bets are being made on these stocks. Um, and then there's, the second part of it, just like when there's so much momentum involved in these trades, the rug pulls, the speed at which institutions can kind of like take the value of your trade, even if you have stops put in place, is just immensely fast. So I think that means that makes it so much riskier than playing something like SMCI, and why we recommend something like SMCI or even BLOK if you want to go long blockchain, which we think is a much safer investment that has huge potential than being long a single cryptocurrency, any single cryptocurrency. And I think that's always important to understand the relationship between risk and reward.
So since we're on the crypto talk topic, we might as well just get into our crypto story of the day, which was Bitcoin hitting a new all-time high. It passed $72,000 this morning. Um, the news that came out was that UK regulators gave a green light for exchanges to list cryptocurrency linked products. So the new ETFs that came out in the UK. But when Bitcoin rose today, it actually passed silver for the first time in market cap. So based on what you were just saying before, it doesn't sound like that milestone happening gives you any more confidence than you had before it happened in Bitcoin in the crypto market.
Well, it's tough. And I think that it, like what you're talking about, plays to exactly what I'm saying, right? There's so much there's so much like of these news stories embedded in the value, right? So you take something like what we're talking about here, and it's just like, okay, uh, who's betting on that like UK regulator story? Like there's probably people in the UK close to it that like knew that was going to happen and were very comfortable making massive bets, right? That's exactly what we're talking about. But like the average person, doesn't have any unique insights into whether those laws are going to get passed. They're really taking guesses, right? And there's so many different laws and municipalities and blah blah blah, all of these places that could drive the stock up or down with just one news story that the everyday person doesn't have any special insights into. So that actually just makes the point even stronger that there are risks to these things that we just don't really have the answers to. And it doesn't mean you're right or wrong or whatever if it goes up or down, or and you've kind of guessed right, because what it's really about, and what we try to do at Prospero, one of the reasons I think our performance is so good, is we really care about minimizing risk and then finding upside once we've done the max amount to minimizing risk. And there's just not risk minimization principles in investing in especially single cryptocurrencies. Just isn't, especially as you get into the altcoins. Um, like Doge and Shiba Inu like drive me absolutely crazy. Like one of the things, the stat I heard about Dogecoin is that 80 per like um if you invested a month after it was created, you're 80% down right now. That's like absolutely nuts that you had to get in so early to make money, and you have all this like win porn around it. But the bottom line is, a lot of those people that are pushing it, want to take it for another ride. But the bottom line is, it wasn't good for most of the people that got in and were sold on these things. And all you ever talk about is hear about the wins, but that's the problem in actuality. Um, Yeah, Topher. It happened. I actually have, you see stories all over the place in Bitcoin, and I actually, an investor in Prospero, um, actually, uh, he like lived in a building in Soho where like a Bitcoin startup lived below him, and he's like an MIT grad and works in finance. Um, and they were just like, hey, we would love you on the advisory board. And I think he might have like, I don't think exactly the number, but it was a non-insignificant number of Bitcoins that he was just given for this advisory thing. And he just like, the funny thing about him is like, because they were just like given to him and he wasn't really like speculating on it, he held them forever. I mean, I don't know if he's gotten rid of any yet. We haven't talked about it. But yeah, like you see those stories all over the map I even know someone that like had their coins stolen and they had to engage in a lawsuit for 3 or 4 years. And then they finally got them back. And this was like this huge windfall because them getting stolen actually ended up being beneficial because he was like, yeah, I actually don't think I would have held for that long if they didn't get stolen. And he ended up getting paid out in like the market value at the end. So yeah, there's tons of those stories, and it's just like there's nothing wrong with looking for speculative investments. It's just like we're very honest here about the risks people are taking, and it's just very, very risky. You could easily lose a lot of money, and we don't like to recommend things where we could see people easily losing a lot of money. Like even the way we're talking about Meta, those that watch us, like as we start to see like some cracks forming in the investment thesis, we've changed our narrative around it, and you know I think that's just a very, very important part of investing, understanding the risks.
So speaking of risks, I wanted to highlight a possible concern for the top 10 biggest stocks. So the market concentration of the 10 biggest stocks is about 30% now, which is pretty high when you look historically. And typically following periods of this type of concentration, an equal weighted index outperforms the normal index. Do you think we could see that play out again? And would an equal weighted index be attractive to you over the regular SPY or QQQ at this time?
I think once you start to get into like equal weight or whatever, like I would recommend something like that we do with like the diversified portfolio with Prospero, um, where it just like once you're starting to get into those numbers of not letting, I would say like an index like S&P or even Vanguard Total Return, which I would definitely recommend over SPY or equal weight. Vanguard just does a lot to balance, rebalance, you know, control for risk, lower fees. That's what I'd really recommend over SPY or SPY equal weight. But even more than that, if you're not going to just buy Vanguard Total Return, which is like the um, passive investment vehicle that we'd recommend, that or Schwab Dividend, like SCHD. Um, those are the two passive ones that we would recommend. But I would say once you get into like more in-depth diversification, like yeah, something like the Prospero diversified portfolio, where you're picking like one winner in each sector, like I'd say is a much better way to equal weight things because you're really taking like anything that you can do that kind of like takes your thinking out of things is a good way to control for risk, right? It's very hard when you know you're not exactly sure what the economy is going to do or you don't necessarily have a really solid market view of your own to just spread things out because like I think a really good example is we talk about like you know war a lot and that being like well we think like SCC which is an inverse consumer discretionary ETF that we recommend a lot especially for you know tech consumer goods heavy portfolios um, is really good because we think a lot of scenarios that could send the market down are covered by like consumer spending embedded in that consumer discretionary stock, right? Um, but one of the glaring obvious ones that doesn't cover that downside or consumer spending as much is war. So that's where like adding you know like a Raytheon or a General Dynamics um Lockheed Martin to your portfolio um would really help that diversification, right? Because in scenarios of war that would hurt a lot of your portfolio. We see a lot of the times like depending on where the conflict is certainly you know those defense stocks going up. A lot of the times, energy prices and energy stocks go up. So that's a really good example of you know how for different scenarios you can be protected by that diversification.
So for everyone watching, we have one more topic before we're going to get into our closing segments. But if you have any questions that are stock specific or more general, just about investing, AI, business, feel free to comment them. We'll get into them before we switch over. But this last story is one that was pretty interesting to me to see over the weekend. So it was announced that Jake Paul and Mike Tyson will be fighting this summer, which a lot of people had opinions on since Tyson is 57 and Jake Paul is 27. But what's interesting about the story in stock market related terms is that it will actually be on Netflix, which is one of their first forays into live sports, and a boxing event of this magnitude. It'll be really interesting for me to see how many people this reaches on a platform like Netflix. You want to talk about how you feel like this will affect Netflix stock and live sports going forward?
Yeah, it's a great question. But I definitely see, like, one of the things that we say that we're already seeing move is that the last thing that these streaming giants don't have is live sports, right? So the more they make, like, if Netflix can get like a lot more live sports, and I've actually seen like a lot of basketball on Max lately. And like, yeah, if those go to the streaming platforms, not only like short the shit out of cable companies, like for sure. I would also say that that like, yeah, the streaming giants, and like that's the reason we like Google. Like I think YouTube, their business long term is really underrated. And I've heard you, Steven, say you only watch YouTube. Like I know my young my nieces and nephews, they like watch YouTube almost exclusively, and all their shows are on YouTube. Like I think YouTube has a huge future, especially if like Google can keep snagging live sports for it. And that's like one of the things that we're talking about more and more. We talked about it last week, but we have a lot of new um, viewers, and I think it can never hurt to like hammer home these points for people too. Like one of the things that we say in terms of like what sectors people should invest in, and I get asked that, and I was like, well, I don't really feel comfortable in many sectors long term because of like the cloud giants, right? And that's just another example. Like we talk about it within chips, and like the cloud giants, Microsoft, Google, um, uh, Microsoft, Google, Amazon, and then I think Meta is also making their own chips. So even though they're not a cloud giant, they're also making their own chips. That is a risk factor for the booming chips industry. And I think we got a question there that I can circle back. Um, and uh, that makes it really hard because even we're talking about streaming, right? And immediately we have to be like Google, Amazon, like those companies could be, streaming, like, they're getting there on streaming. I think Amazon is also, they're really forming a good product there. So yeah, it just becomes really hard to odds make sectors and bet against anything that isn't the cloud giants long term, to be perfectly frank. Like next 10 years, I'd rather own Amazon, Google, Microsoft than any other company. I mean, Tesla is probably shortly behind, along with Meta and a group like right there behind. Mercado Libre, like the international, or sorry, the like Latin American Amazon, I think is very interesting because they also are doing interesting things on the blockchain to kind of combine stories that we're talking about. BLOK actually has Mercado Libre in that diversified blockchain ETF that we talk about, actually has Mercado Libre in that ETF, as well as Square and PayPal. That's one of the reasons we like it, because it's a little diversified in the risk, and it gets like a lot of different kind of blockchain exposure, including like Galaxy, which is the one of the most respected crypto hedge funds. So you're getting kind of that like active management embedded in block too. But yeah, to speed through some of the questions, ITA, yes, for those that don't know, it's a defense. It's like an aerospace and defense ETF. That's a great way to get some diversification, right? You could easily do something like a tech heavy portfolio, then have some ITA, some SCC, which is an inverse consumer discretionary one. And yeah, that's a good way. You could easily own something like a portfolio that's like Meta, SMCI, Eli Lilly, which are just some of our favorites there. And then we might change on Meta. Maybe BlackRock we're actually seeing come on pretty strong in our signal. And then you own SEC and ITA, and that's like a nice little, that way you don't even have to branch out and to go into every sector. You get some really good like downside coverage there. And then you have a really nice diversified portfolio that you can kind of like set and forget for the next year. And for some people, that's just exactly what they want. Some people want more active management. And we got a lot of people to hybrid approaches too, where you could say, you know what, why don't you put 90% of your portfolio in SCHD or Vanguard Total Return, some kind of shit. And it's like, we'll teach you how to play with the other 10% diversified, where you experiment with that in your own kind of safe way. Let me go. NVIDIA, which one would you pick? SMCI, especially as is getting added right now. SMCI still has a very low 2026 PE ratio, so that value is going to catch up. They're just like they have a lot more room to grow than NVIDIA, so I think that makes them safer if I was going to pick any of those three. But LRCX is actually our favorite. Lam Research, that is the best value chip that we see. So if you're worried about volatility risk, and by the way, I would be worried for all of those stocks, we actually recommend Lam Research LRCX as the best risk controlled chip stock to add.
I think that's a great point, and it's crazy. Like if Nvidia stock were to grow 30% more, they would be the biggest company on the stock market. I mean, it's just insane the growth that their company business stock has had.
Nice recovery in the market. Oh, I might need to drop Sinclair pretty soon. Damn. We'll have to see. I think that segues pretty well. Any other questions here before I switch and go through some of the newsletter stuff? We're gonna write kind of, I'd say, a short update to the investing letter, and then the trading letter. We'll do that live, so you guys will get to see how the sausage is made, so to speak, on our paid products. Any questions before I switch computers?
Not that I see right now, but I will update you if we get any changes.
Oh, let's check X, because sometimes we look for, if you are watching us on X and want to post on the thread, for us to take a look at that. I guess you can keep your eye on that, Stephen. And yeah, maybe as I switch computers, which should be pretty quick today because we set them up on both, maybe you just want to intro what I'm doing next a little bit.
Sure. Okay, so for everyone who's in here, as George is switching over, he's going to be writing an updated view on the stock sees in the market that he's liking, and kind of the overall movements that we're seeing today, and kind of just updating his view on the markets. Well, that's what we're going to do first. And for the people that are subscribed to our Substack, which I could link here after George gets back. And then after that, we're going to be going into the normal update of the model portfolio, which, like we shared, has been doing very well this year, outperforming the S&P 500 by a wide margin. And feel free to comment any questions that you have as we're doing it. I'll try to read them off to George. Sometimes he's a bit occupied, doing the work, so it could be tough to answer, but we'll try to get them answered for you. And even after, if we have to wait, we'll get to them eventually. For all the people in here, I know I say it all the time, but I watch videos, and they say that when you ask people to subscribe on YouTube, it's always good. So if you're watching on YouTube, please subscribe. Thank you for everybody who watches. Hopefully you enjoyed the topics we talked about today and found some value. I'm happy to see some new faces watching. Topher, I'm not sure I recognize your name, but thank you for commenting and being in here. Yeah, we're switching over right now, but we'll be ready to go in only a moment. Looks like George has joined us.
Hello. Oh, I need to get my sound working.
Look at us.
We got to boom to this
multi-cam, multi-setup.
We got everybody. Thanks everybody for staying for the model portfolio. We sometimes we get people abandoning ship. Can you talk, Stephen?
Yeah. So what are we calling the thing that we're doing first? We're just doing the Substack. We're we're just creating your updated view on the market, some stocks that you're seeing, right?
Yeah, we're going to take, well, no, this is just like, we're going to take a look at all of the newsletter pick stocks and just like what they're doing in the app, what they're doing, and just kind of like do the write up there. So, we'll show everybody what we're doing. I'll start sharing my screen. I want to make sure I have the proper thing pulled up. All right. So we're going to show a little bit. And like for people, this will be a great way for people to review, for people that don't really like quite get the difference between the investing and trading letter as well. And yeah, we can basically, so we're going to go, what I'm just doing, like to just make it easier to follow, I'm just going to grab these, right? And I'm going to make a new post. All right, so that's what everybody's going to see for free. We're putting them as that's annoying. All right. What is it? All right. What? Oh, that's annoying. We have all these new viewers, Stephen, but they never say anything.
I'm starting to wonder if there's a problem with because since StreamYard just added Twitter like a month or so ago into their system, I'm wondering if they're having some kind of like glitch in the tracking number, because I feel like we get more comments. If you're watching on Twitter right now, I know there's one person who will comment if I ask. Comment on our Twitter stream and let us know. We got one last time from somebody, so let us know that you're watching, that you're enjoying the stream.
Yeah, that would help. But we just keep last time we just keep on gaining steam. You know, no reason to doubt. Like, I mean, we do have like, I would say like we do typically have like a decent amount of like watchers that don't comment. So I don't necessarily think it's fake.
Agreed. And you know, we just started it on Twitter not too long ago. YouTube has been going for much longer, so it's good to see it growing quickly, seemingly.
Yeah, check on that. But yeah, we're gonna take a look. We're just gonna go through one by one. We'll go look in order. Meta has recovered nicely. I'm glad I held on to it. It was a tough little morning. But yeah, net option sentiment is staying strong on it. Still 100 upside breakout. We'll take a quick look at the technicals. But I don't think we're gonna get out of Meta yet. But yeah, see on the 15-minute, on the 30-minute, it's not looking good. But 15-minute, we'll take a look at 5. It's doing a little better. But I don't really like that 30-minute trend that we saw. But it is, we are seeing some recovery here. The TTM squeeze is looking a little stronger. We'll keep an eye out. I don't think we're dropping that quite yet. Let's take a look at, one thing that I did want to pull up because we're going to take a look. I did also want to do, just add a day here. Got to do 4 here because of the weekend. Before we just do anything, I'm just making sure. I'm just getting our sector update together. Okay, let's take a look. Anything interesting? Yeah, we're seeing comms come back a little bit. So no reason to drop. I mean, Sinclair might be a short that we drop, but we'll take a look at that. Actually, can you do me a favor, Stephen? Can you check like what open positions we have of these in the model portfolio?
Yes, I will get on that right now.
And why don't you just write? I'm just gonna make a doc. If you just write this, and we'll take a look. Write the number in like parens, like so. I think we have like 3 or 4. You get it, right? So whatever meta is, maybe 4. Just like write that there.
Wait, why would I write 4 for meta?
What?
Why would I write 4 for meta?
I think that's how many meta positions we have open. Like I'm saying.
Oh, so the total open positions. Okay.
Yeah, I don't know. I'm saying check that.
Yep, I got you.
And then we'll come back when you say we're done. We'll take a look at that. But I just shared it with you with your Gmail. I gotta start sending it to your Prospero email. Okay, so industrials looks bad. That's the main thing. Real estate looks to be in a bad trend. Tech is definitely in a bad trend, but I think we shorted the wrong tech stocks. I think we might want to look big cap tech, like we said. So we're definitely going to take a look at that. But for now, let's keep going. We're going to look at Eli Lilly. Eli Lilly. Wow, Eli Lilly's got 83 profitability and 71 growth, looking really strong. Yeah, I mean, let's take a look at the healthcare sector. A little down, but fine. Yeah, holding on to Eli Lilly. Costco was when we were thinking about dropping. 77 at option sentiment. That's actually an up in the trend. Let's take a look at Costco on the technicals, because I do think we want to hold that. Costco looks pretty good. It's got an 80 upside breakout. Yeah, it's trending in the other direction. Let's look at the 15. Oh, we're gonna keep an eye on Costco. Take another look. I don't like this trend. It looks like it's speeding up, and we might actually have time to get out of it quickly. But let's take a look at it in the 1 hour. Yeah. I don't love that. We might get out of it by the end of this. We're going to keep our eye on that. Okay, TR. Well, while we're here, we'll take a look at the technicals first. Oh, TRGP looks good. Holding it for sure. Okay. NEE had its first down day in a bit. Let's take a look. Yeah. Net option sentiment down to 54, even though it opened at 63. Yeah, we might get out of NEE. Let's take a look at the technicals. Yeah, I think we're going to actually even get out of NEE right now. You had a good run, NEE. Do you know how many open positions in NEE we have? Can you check that right now? Did you do that already, Stephen?
I didn't do NE. I'm looking right now. I don't see any longs.
In the trading portfolio?
Oh no, I've been looking in the model portfolio.
Yeah. The model portfolio is a trading portfolio. No longs.
Oh, yeah, no longs.
Okay. Then that's all we need to do. Moving right along. SMCI. We're seeing a nice recovery in that, so I doubt I'll want to get out of these unless I'm seeing like some very concerning like short pressure stuff here. Yeah, short pressure is at 80 still. Net options on SMCI is down to 69. That is low. I'm a bit concerned. Yeah, we might still get out of SMCI. I mean, I don't know. It's really tough with it getting added to the. I think it's this week. Oh no, it's next week that it gets added. Yeah, we might get out of it for this week and get back in. We'll look. NVIDIA we'll also think about more, but I don't think we're in a hurry like we were with NEE. We're going to look at NVIDIA. NVIDIA holding strong at 100 in option sentiment. Oh, it actually opened at 99. It lost its stranglehold for the first time. I wonder what opened on top. Okay, stay in everything. I'm pretty sure we're going to want to stay in KW. Let's see. Meta 2. Don't worry about move to the short, Stephen, because I don't think we're gonna. We already made decisions on those. You're behind our decisions.
Got it.
Take a look at KW. Yeah. Because we might add a KW short. 27 in option sentiment. Yeah, it opened at 37. We're in good shape. Oh, KW is the max upside breakout. We might actually add, downside breakout. We might actually add to that position in the model portfolio, given that information. But let's look what's going on with SBGI, because we lost some ground on that today. It's doing very well. A surprising, it's still looking bad. I'm not in any hurry to get out of it necessarily. But the technicals did. Yikes. Yeah, still on the 4 hour, 2 hour. Yeah, how are we on 5? We'll keep our eye on the 3 minute it's heading down. We're going to keep our eye on this one. But we might exit that for sure. Yeah, we have 3. I think we'll definitely exit some of those in the model portfolio when we get there. How are we doing? We still going strong on the viewers? Yeah. Wow, we're even increasing. We're really like it's a brave new world here, Stephen. The longer we stay live, the more we pick up momentum.
It's the value that the Prospero.Ai live streams provide, George.
I know. We're gonna have to. I'm gonna have to eat better before these, so I'm not so hungry on the lunch one. but yeah, we still got a lot of we still have to update the model portfolio. So a lot of action still left here today, and then at the end we'll pause for questions one more time. So if you have questions, you can certainly, you can always throw them our way. But if you want to think about what you want to ask at the end, we tend not to stick around waiting very long, especially when we run these marathon ones. But yeah, let's look at HSBC. A great ad. Like, yeah, our signals have been really hating or hating it / loving it as a bear. That upside breakout is going down, downside breakout's going up. Everything that you want to see. Let's take a look. I mean, I don't think there's anything that could really make us want to get out of this right now. Yep, if anything, it looks like I think we're gonna take, I'm bolding these because I think we're gonna adjust. What is going on with LPL? Oh no, leg is first. 3 legs. Oof. All right. Yeah, net option sentiment at 6. Leg is looking like a good keep, but we might adjust it. All right, looking on the 15, 30. Ooh. How much is the SPY up today? Down. We might want to get out of leg. It's in a definite. Oh, we're losing a little momentum there. Oh, all right. Maybe not yet. No rush. We're looking much better on the 1 minute. Okay. Keeping that. Although we might want to adjust that too. That's not a hard and fast. All right. Looking at LPL. Still looking good. How are we on the technicals? LPL has had a stronger day. Yeah, all over the place. We'll keep our eye on LPL. While we're here, yeah, are we actually changing any of these? Oh, Geo is definitely one that looked like we might want to change. Yeah. Grocery outlet still has some good peripherals on net option sentiment. We might hold it for it to go back the other direction. It is looking a little stronger than we'd like it to, but we're not going to make any. We're not in a rush to make any moves. 2 wishes. Oh, we got wish open right here. No, I don't want it. I don't want it like that. So that's interesting. We just ended up exiting 1 long. Yep, definitely holding on to wish. Okay, I think that's everything. Gonna get this one out. Come to these 8 shorts. Do we delete some accidentally? Oh, we skipped right past Xerox. Oh, here. We skipped Xerox. No one's paying close enough attention here. Yeah, Xerox is still looking like a good short in the app. Let's check on the technicals. Making a recovery on the half hour. It's going in a bad direction there. It's a bit too complicated. As a result, not going to touch it for now. All right. 1 letter down, 1 to go. Any questions there, Stephen?
Not really about the stock market. We kind of just got some commentary on X streaming versus YouTube. Some people sharing their thoughts on that.
Oh, are you looking at? I don't have our Twitter open. Are you taking a look at that?
Yes, we got a comment from Nunya Business saying you wanted a comment. Here you go.
I think that was the same. I think that was the same commenter as last time.
Yeah.
Thank you.
And then,
Thank you.
And then also, Hotel Sierra, which I think is Spiky Dude, also commented, just testing the X.
So, contrary to your speculation, Stephen, there are real.
Yeah.
There are real X watchers. Okay, so we got these little. I like just posting the update as we did with these pictures. We're going to do that again, I think. All right, but first.
All right, we did just get a question about SMCI from Ronald Wagner. He's saying he's down on his position of SMCI, but with catalysts like GTC and S&P, I guess he's asking you if you should hold it through them at least.
Yeah, I mean, we're holding it because we do like those catalysts, right? I think we're bullish on those catalysts. That's the only reason we're holding it. But it's yeah, I mean, I think that's why we're still in SMCI. We really like those catalysts, especially the S&P one. But I mean, it's fair. Like I do think what might be happening is like shorts might be might be hammering the stock to get it in, like get it down before they cover, before before it gets added to the S&P 500. I do believe that's what's going to be happening. But that's what makes it hard, right? You don't know when they're going to decide to flip around and cover, because it might not be all the way to the day, because they might be worried that they're going to get snuck up on again as it gets closer to the day. So that's why it's really hard to odds make these situations a lot of the time. Can you clarify how you got out of SNE just a while ago, but kept it as a long in the portfolio? I don't know what you're talking about there. We got out of it just today. We didn't keep it as a long. It's no longer a long. It was a long before that. So I'm not really sure what you're asking, Gilbert. If you're asking this, this is in the model portfolio, right? And we have 2 different products. We have the trading letter that's associated with the model portfolio, and then we have the investing letter and the newsletter picks associated with those. Those are 2 different things. One thing that I did want to just pull up is, and actually I'll show people this of how to get there. So when you go into our letter, right, all filled up on chips here, right at the top, we're linking our short intro and learning videos, right? And then uh, right here, our questions of our free versus paid products right here. It talks about, what we have, the investing letter, the paid week. I'll drop this here for everyone. I have to add as of. What is this? It's just waiting here. I don't know what this is doing here. Okay, I'm going to drop there so people understand what our products. Did that answer your question, Gilbert? And then, yeah, you can see that we did send out a chat that says we got out of NEE right here. So that was us exiting, right? We print the price. Hopefully that answers your question. We're going to get back to the model portfolio here. And then, as is tradition, next up, we were going to send ourselves screenshots of the time series for QQQ, SPY, sending myself just a picture of QQQ and SPY net option sentiment in the app because I like having those visuals in the letter. All right, now as we do next, we're just going to take a look at our long and short tracker and see if there's any concerning trends here. KIX10 is actually looking good. EXP, let's take a look at what's going on there. We might want to get out of that. Yeah, oh yeah, we definitely. Although it's looking a little better, we'll keep it. But we want to keep as we do sometimes with this, we are going to have our eye on EXP. So we just like to put that bold. So we know we might want to exit. All right, that's that. Oh yeah, I think we want to get out of, I think per this, I think we want to add, I want to take a look. Oh shit. What the hell? There must be a news story with this. Damn, we were really in the green on that. And we might have gone. Damn. Well, I don't think we're going to exit now. I think we might wait to see this play out and see if it reverses. That is a very big. I'm not seeing any news stories. If anybody knows what's going on with Sinclair and why it's going crazy, let's take a look at the net option sentiment. Yeah, it's lower still. Okay. We are going to keep monitoring that, but that is very confusing. I do think we want to add another HSBC. Where did we add CRM? I don't remember adding CRM. God, we really got screwed on this Sinclair thing. I was thinking about dropping it this morning and I didn't. And that was stupid. But we're not going to beat ourselves too much. We're not going to beat ourselves up too much over it. CRM, are we in profit on that? Yeah. What is that? Is that on 30-minute? A longer trend. Yeah, we're getting. We are definitely getting out of CRM. We want to reduce our tech exposure. Which actually does bring up a good point. I want to see if we have like dupes. Oh, definitely want to get rid of at least one ETN. Well, let's see. Are these in the... Yeah, we're deciding to take profit on ETN. All right. Anything else? ACN. Mm, 16, 20, minus 29. Oh, but we got a nice performance on Shockwave. So I don't think we're going to drop any. Let's see actually what's going on. Yeah, we're gonna hold it because of positive movement. Okay. I think we want to just check on ODFL too, because we're not really happy with. That trend's fine. We'll hold one. We'll hold one of those trends. All right. So now let us look at short tracker. XBit. And 5. That trend looks good. Whirlpool. Oh, good. Ooh. All right, getting an SBLK for sure. Anything else look interesting? Let's take a look at KRTX. We might want to just get out of one of them. Yeah, definitely. I think definitely one of 3 legs. Too much leg. We don't want that much leg. All right, that is a very high net option sentiment on HIB. But a nice price trend. So we're going to keep our eye on that because sometimes we see that continue to rise before. So we might, if that doesn't go back down before the end of the day, we'll probably exit. That's a nice win on that. All right, GRWG. That looks too strong to think about otherwise. As he always screws us. I don't know. It's one of the ones that we just like. The signals seem to do well, and we have a real talent for timing it wrong. On that 5 minute, we'll hold a little longer. 8. A real talent.
We just got a question from Gilbert about ANET. Maybe we could check it out. Said he's personally waiting for net options to climb up a bit before going in.
Never a bad idea, Gilbert. Not a bad day today. A bad week though. Let's take a look at the technicals. Ooh, don't love that trend. But it's climbing on the 30. Let's take a look. I like that trend. Let's take a look. Ain't it? Oh yeah, that's low. 59 option sentiment, obviously. That's interesting. Why does it not say 59 here? Sometimes we get a little behind on it. Let's just make sure everything is pulling in well. Oh no, that's pulling in properly. Yeah, okay, good. That was like, that wasn't pulling in properly last week and it hadn't. I mean, honestly, well, it's looking good in the technicals. Otherwise, we would if it didn't look so positive in the technicals, we would probably have eliminated it. All right. Now let us. All right. I think that's all of the current positions. We do want to grab these and throw them in. Oh, we're going to guess here. Did we guess right? Yes, we did. It's just our day. All right, now sacrifice that. All right, we have our drops. We have HSBC. All right. How do we want to do this? Let's see. All right. This is how we're going to do it. We're going to do one regular and then one large cap tech bear, because we want some large cap tech bears. This is our regular.
We got a question asking if you think CPI is going to be a big mover of the market when it's released.
I mean, it always is. Like, is that the right thing? Probably not. I think it depends, right? But we do tend to see now, like, even in what I would say like pretty like unexciting news, we've actually seen pretty decent moves. So I think, I am these days and for a bit, I'm pretty cautious when it comes to playing anything, either way. And I kind of like reduce exposure. Is kind of how I think about it, because hard event to predict. What? Oops. I was like, that does not make sense. That makes more sense. Oh, meta short pressure has gone above. How many Microsofts do we have open?
To Microsoft.
$18. How are we doing on the viewer, Steven? We still gaining momentum? What's the count?
232 is the count right now.
Man, it's gonna be hard to end this, just like last week, as we gain momentum. But after this, we'll answer the balance of the questions, and then I gotta start eating. That's my lesson. That's my lesson today. I mean, eating more. I had some breakfast. I had a smoothie for breakfast, but it's not enough. Not enough to get through these marathons. What's going on with Adobe? Yeah, we'll grab one Adobe. How many BlackRock do we have open? 2. That's enough. I was gonna up it to 2 if we didn't. I'm flirting with Micron a lot. Let's see what's going on. Oh yeah, Hubs definitely. Can you talk to me about the net option sentiment trend on Hubs?
Trending downward, but very not volatile. It was at 87. Now it's at 85. It's a very tight trend.
All right, so we are going to get a bonus today. Everyone, you are in luck. 18. Oh, I have plenty of that. Fiber is a new one. Oh, how many MAXNs do we have open? Interesting. Oh, we do. Not updated. Whatever, we have some open. I think we have one of this. I don't want one of that. I want to get BKE in. Okay, perfect. What is cold? Miracle. Yeah, we're gonna get that in. We're gonna find a way to get in cold. I think we have 2 E's open. I think that's how we're gonna get it in. Take a look at E. 2 E's is plenty. Do we have any series open? I think we closed them all.
One Siri.
I think we're gonna grab another one. Oh, we don't have any KWs open, right? I don't think we do.
We do. We have one.
All right, well, we don't need to go too far there then. All right, we're getting these 2. Do we have any Savas open?
Yes, one.
That's probably enough. LYB. Well, we don't like that trend anyway. Do we have any NVROs open?
We do not.
We are going to now. Do we have any VLYs open? VLYs, FE.
One.
I'm sorry.
One VLY.
Do you know if we're winning on that?
Not currently. It's a loss.
Either way, I think we're going to get out of it. I don't like what it's doing. We're getting out. We don't care. Win or lose. Where were we? Do we have any FWRDs?
Yes, we do. We have 2.
How about any UDRs?
No UDR.
Oh, Frontier Communications. Oh, damn, I would have loved to short Frontier. How are you looking on the 5? Maybe. Yeah, we're gonna get Frontier. We don't like it. Can you talk to me about the net option sentiment trend on Frontier?
What's the ticker? FYBR?
FYBR.
It's showing 0. It was at 46 this morning.
What?
It shows up as 0 right now, but I was at 46 this morning.
Net option sentiment?
Yeah.
Might be time to get in to Frontier as a newsletter. That downside breakout isn't high enough for me to jump right in. All right. Let me just make sure. Oh, no. We're not ready to send yet. We're doing one more thing. Is there any just bear? Yeah, whatever. Okay. Actually, okay, we'll leave it for now. All right. Let's get the most current numbers because why not? And then we're just going to make our lives a lot easier. And very quickly, just get tech only. Actually, I'm going to take one more look at sectors and just verify that what's going on. Yeah, we still got a negative movement in tech. Healthcare, I don't know our exposure. Oh, we might want to go bullish on materials. We'll look at that a little later. I do like that. Okay, so we're actually gonna do 2 things. We might add a materials. Okay, so we want material. Oh no. So we want to do we're getting close to the end. Oh, I want to speed up. I want to get this sent out by 1. Spare ourselves. It makes it easier for the person that has to copy this, which isn't me. Brent is very patient with these sometimes very long letters. All right, so we are looking for basic materials longs. What is going on with APD? All right, we're just going to look very quickly. We're actually just going to pick one to add. Oh, that looks like a very nice trend. All right, we're adding it right now to both investing and trading. We're going to look at this more on the investing side, but we're adding it up here. Let's take a look at Lynn. It's not as high. RG, no, it's not high enough. All right. I kind of want. Okay, 5 more minutes. Okay. $15, perfect. All right, now we want to do. We are looking at tech. We're going to grab, we're just going to do something interesting here. We're going to grab 30. Oh, that was a good first guess. We don't need this anymore. These are all tech. Oh no, are these all tech? Yeah, okay. Wait, what? Just so I can keep track. Okay. So now we need to go into Google. Now we're going to go here. Actually, no, we need it to be there. I'm going to do wonderful. All right, now we can go back here. Then we're going to go back into our little thing. We are going to do this. And then all right, and then we are just we actually need this too. Okay, so first, I want to do this, and then I just want the top. I want the top 20. All right, so we're just going to delete. We're going to delete these, and then we want to sort by this again, right? Oh God, we were going to short Bumble last week. I really wanted to short Bumble, but it doesn't matter. We're going to get this now. We need 5 more. Don't need that anymore. Got our little perfect. We went past 1. It's all right. We did it for the right reasons. Yeah, I'm not going to do it this way. It's going to get confusing. SSYS. Nope. Oh, is Bumble going to line up for us? If it does line up for us, we're gonna get into it right away. Well, good thing we didn't short it over the weekend. We are going to keep our eye on that, but not happening. KD. Oh, this is no. No, definitely not KD. Bentley Systems? It's like the car company? Oh. I think we have our first candidate. How are you doing on the 5? Can't win them all. It's not newsletter pick worthy, but we do want to get this exposure. cover ourselves more. Ooh, Progress software. Ooh, this looks interesting. Talk to me about Progress softwares. We're just going to do it right now. We might get into this live. I think we like Progress software as a newsletter short.
Net options is at 16. It hit a new low of 9 this morning, and it is looking ugly in net options.
We're getting in. No further questions, Your Honor. We're typing in all caps. We don't even care. We're just getting the job done. And we're going to enter short. I think 2x. I almost did 3. We don't want to be crazy. All right. We got a winner. And we might have jumped the gun a little bit, but the trend all around was just exactly what we want to see. Ooh. Yeah, I think that's enough. No. We've been screwed shorting Datadog before. Not happening on that 15-minute. All right. Did you say we had a question, Stephen? I don't think we did, right?
I mean, we just got a new one actually, like kind of recently. He was just mentioning, does the SPY go green by end of day? Kind of just a comment or a question.
Yeah, we don't really make those kind of predictions around here. Viav. What's going on in the 15-minute here? No, not worth it. Vishay, popular. Nah. Definitely not. Appian. I don't like that name for a company. It annoys me. Ooh, this is interesting. I'm going to look at the trend in APPN. All right. I like what's going on with APPN. So I think we're going to get out of LPL short and into APPN short. Yep. Swapping out for a better short, I think. This one we're almost sending, so I don't need to send it out. Larger cap tech, we're making the switch. All right, EXTR. No, definitely not. EXLS. Yeah. EXL. How's EXLS doing in the trend of net option sentiment?
It's at 29 right now. It was at 42 this morning. It's hitting higher lows and lower highs, so it's kind of condensing.
Kind of like CNXC too. All right, I'll tell you what I see when I see. Yeah, we see some up and down on CNXC net option sentiment. So I'm going to keep my eye on it. Might add that as a newsletter pick too. But for now, we're done with this marathon, it looks like. Okay. We're going to press send on this at exactly 110 to help Brent out. But I'm just going to get updated numbers for SPY and QQQ. Hope everybody, there's going to be a last call for questions soon. All right, let's take a quick scan. Boy, this was a marathon, another marathon. Oh, you know what we wanted to do? Get an updated sectors auto. Oh, we didn't target any industrial shorts. Too late for that. We might look for that later. That's in the after programming. All right, 110. We are pushing send. This marathon is almost over. Okay. Yeah, Topher. No, I'll give you a bit longer. It was a bit tongue in cheek. You know, we don't make. I think, you know, one of the things that we do at Prospero is we find it very important to be honest about what can and can't be done and where you can and can't compete, right? And one of the analogies that we always like give to retail investors is that we don't really like to talk about like manipulation, right? I would say that it's not a fair playing field, right? But there's a difference between an unfair playing field and manipulation. And I'll give you the example, right? Like all the time, you board a plane and you have private flights, first class flights, whatever. Nobody seems to say, why do people get to pay more money and have their bodies transported in different classes? But why people pay more and less money to have their trades, transported in different classes? People say that's manipulative. Like, I say it's not manipulative because that's pretty out in the open. Like, as it is with the flying, there's just some people that feel that they've been owed a right to equal trade transport, and I don't see that anywhere in the Constitution, right? And a lot of people, especially if you're working on Robinhood, you are actually signing terms of service that opt in to these, unfair systems. You're signing a contract that says you are. Unlike planes, where I never saw anyone sign a contract saying they're signing up for these differentiating like flight treatments, right? But it's the same kind of thing. More money gets you different modes of transport. And I give that as a lead in because it's just like one of the things Prospero does that makes our signals, very unique versus other AI companies is we don't try or claim that we're going to beat an institution in a nonlinear equation competition because Bridgewater, Renaissance, they've been buying, billions of dollars of alternative data for years that we don't have, you don't have. They've been building tech platforms for 20, 30, 40 years. We, even at Prospero, we've done really good work, but our platform is only 13 years old, right? Which is older than most AI companies. But if you look at this, these upstarts, and when you look at it, when they say, oh, well, we could beat the market, it's like, yeah, right. Like you haven't even raised $100 million, a lot of these tech upstarts. And it's like, you're claiming you can beat these hedge funds in nonlinear equation competitions when they could lose that in a day and not even bat an eye? No, they can't do it, right? So I give that intro to where it's just like the only people that should be making SPY predictions are those funds, Renaissance, Bridgewater, places like BlackRock that has like an Aladdin AI, those are the real people that should be making predictions, including me, right? I have respect for what they're doing. One of the things that we do, we visualize, whether it be net option sentiment in the short-term options markets or upside or downside in the long term. We're doing a lot to understand and visualize and amalgamate where those companies are making their options bets, right? So I think that's one of the reasons that's a huge differentiator for us and one of the reasons we do so well. But that being said, nobody should be giving predictions on SPY going green or red or at the end of the day. The only ones that are qualified are places like I'm talking about. And even they don't make a prediction most of the time because they know that there's a lot of factors that are out of their control. They're much more capable hands. So I shouldn't be making those predictions. You shouldn't. I mean, nobody on YouTube should be answering those questions for real. They don't really know. They don't have any idea. Does that help, Topher? Sorry, we like to be pretty blunt sometimes because it's important to understand what we can and can't do in the market. That's what helps us understand what spots we can actually pick.
And just an FYI for everyone still here, we post these streams on Spotify, so if you don't catch them live or you want to watch them, there's an alternative place. So it's linked in our description. So you could click on that and follow us there if you're ever wanting to watch them in a different place at a later time. Something from Joseph. I didn't enter SMCI on Friday, but hearing your points on why to hold into next week intrigues me. Would you recommend entering even though it's cheaper and data is different?
We are closer to entering a second SMCI position than closing our current one, but honestly don't really know. Like we're not necessarily like super confident about that. All right. We're gonna keep looking and to give you a little more meat, we're gonna keep our eye on that net option sentiment. We're gonna keep our eye on where short pressure is, and then we'll make a decision whether to update that position more.
Yeah, so we'll probably let you know on Wednesday, Joseph. We could update you then.
Oh, I saw above, like Barbara. It seems like you're saying, you can only comment on YouTube. But yeah, like next time, feel free to comment just on the thread that this is on X, and Stephen and I both checks that periodically. All right, it looks like we answered Joe, and I think we're done here. Last chance for call for things. All right, Stephen, I think we'll see each other on Wednesday.
We are good to go. We'll be back normal time, 3 p.m. Wednesday. Thanks for coming, George. Thanks for watching, everyone. Have a great day.